Okay. And the recording is on. So I'm going to open up here, folks, just a quick little discussion. Hopefully hold your posts in the chat box so that we can focus here. But I'm going to give a quick introduction to Dave, and we're going to leave it at Dave and the rest. I don't know that he wants to give more information than that. He'll choose. He'll speak in a moment. But basically, what I want you to understand is this week we're really not doing Q&A. We're really going to discuss what is one of my weaknesses as a trader and how you're going to work through this and change as a trader. So if I had my druthers or my wishes, of course I wish that I wasn't hyper and needed to always be doing something. The reason I trade gappers one day, which is impulsive and quick, and the next day I'm stalking a huge base on a Dow, D-O-W, or I'm trading a pullback in DE or a breakout in WB. The reason why there are such changes in my behavior of all the different tools I use is because the way my mind works, I have to do 60 things at once. And even though I'll complain and be exhausted, if I wasn't, I'd be bored to death, and I'd do other stupid things in the game. So I do a lot of different things. For most of you, my suggestion would be to do less, meaning if I sat down a trader and they really were willing to listen to what I said and took advice from my experience, they would probably follow the direction of nothing impulsive. Skip the gapper, skip the active, wait for the proper trade, and let the layers develop, let it blossom into a beautiful setup, and then look for a trade. In the case of Dave, which is, it's a gift for all of you that he's here today, Dave has done 111 trades with 89% accuracy using the system we all know here, but with a few tweaks. His approach here is more patient and plotting and focused than I am myself. And in teaching this for the first time in my life to more than one person, I've learned that any further iteration of education will be leading down the path of what a Dave suggests today. Less is more, doing less, and waiting for that really good pitch. But even though I always can't behave that way or display that way by virtue of my personality, it is what I suggest to each and every one of you. So sit still, wait for a setup, and listen to Dave today while he explains to you how he's applied it. So I'm going to hand it over to Dave and he'll introduce himself, but I want to make sure, click a Y in the chat box if you're hearing this clearly. Just let me know. Okay, you guys are all good. So Dave, all you.
Yep. Okay, well, thank you, Randy, and I'd say thank you to everyone and hope I can impart some little tidbit of information that may help you, as I can tell you guys and gals that I've been down this road for a long number of years and have challenged by the market many times. And what's rather interesting is my backdrop is what I thought I'd impart to you a little bit. So very heavy on, if you will, finance and accounting with some advanced degree work, etc., and very much a traditionalist. So you can see I've got 30 plus years as a CFO. Many years ago, I actually had my own securities license, so I'm a very traditionalist from that standpoint. And I started with Dano in April of 14. And the interesting part about it, I didn't make a penny. I was running all over the map. I was lucky. I didn't lose either. I was literally flat for 8 whole months. I did know that I had to retrain myself. So it was a real tough road for me because all I wanted to do was only look at earnings and really just go that route. So what I did was really dive heavily into a number of books, as you can see there, and there's more. But I didn't just read them, I studied them pretty heavily. So I can quote things on Weinstein to Minervini to Darvis, all those guys is kind of crazy. But anyway, through my studies, it didn't quite click. What was interesting, late in 2014, early 2015, I reached out to Randy a little bit, and he just gave me a couple emails, just some real simple insights, but they kind of were like a small light went on for me. And then some other things I started to catch on to. I was listening and watching and running with the chat room too much. And what I mean by that, I had to tell myself, stop looking at the chat and stop chasing, if you will, when someone said something. It's kind of like squirrel, and you turn and you run for it. So what I did was step away from chat, and I started studying the chat. So I used it like a tool, like a study course. I'd actually copy it and read it at night. And it really helped. So I started to get a sense of it, which was interesting. It really helped me kind of feel what I should or shouldn't be doing. And so in 2015, I started getting a hang for it, and I did between 50 and 60%. You can see my numbers there. But I could tell I was still jumping around. I lacked discipline. So through 2016, I still kept honing and questioning my style. And I couldn't find myself. And that's what I had for me as my biggest challenge, was finding myself as a trader. And I've read this, of course, a number of times in these books, but you got to find yourself, and sometimes you go through those crash moments before you really get to the discipline and consistency. So in 2016, I still went through tough times. I thought 48% was great in principle, but not what I was looking for. I lacked discipline, consistency, and reliability. I lacked a true plan. So I took Randy's course, and I came away overwhelmed. But one thing I'll tell you, and further back in slides, is I really had to retool everything of me. It also was really fascinating because it clicked. The more I read it, more I understood it, it clicked, and it actually brought all my, call it book work or book studies, together into Randy's courses. And it started to gel for me, and I came away with thinking, yippee, I really think I have an idea. So, Randy, if you could jump to the next slide for me, please. So, it really clicked, so I started really getting into it, and then here's where I'd want to maybe impart or help you see how do I look at it. So some of the basics are in here. The trend must be there in all aspects. But what I do, since I'll call it methodical, I also have to be very focused. I figured that out with me. I can't listen to the chat room, and I can't do 20 things at once. I can't do 10 things at once. I have to get it narrowed down. Therefore, I use the weekly charts, and I look for that accumulation. So I look for that trend and accumulation. So the green bars of volume are really important for me. And I'm looking for, is it supportive? And then I look for basics, the SNR, the MA kind of support, all the different aspects of trend strength, just everything that you capture from Randy's teaching. And then something I do a little different is I start layering, of course, like we all do, but I actually will weight the layers. So some layers in some stocks are higher than others, but I will weight them. And you'll see further back, I will take, let's just say I end up with 20 potential setups, but because I weight the layers, I can do a probability weighting and then get a cleaner view of what trades might be better than others. And I'll show you a couple examples in trades further back as well. So when I look at stocks, or I seek stocks, I only use Dan first, Randy second. I mean, big number one and big number two. Then I do some searches on my own, and I do a bunch of searches in some different avenues, and I listen or try to read for 4 to 6 chat room members that have my style, which I've kind of learned after I've read the chat room so many times. Because you got all kinds of traders in there, and it's really tricky to filter it, is what I would say. But I do believe, when I was new in here in the chat room was a hindrance, and it was dangerous. It was chopping me up. But as I learned, the chat room is an exceptionally powerful tool. So what I have found is my plan for me has morphed to my style. So I add in, from the aspects of my swing trade style is what works and what doesn't work. So I have to focus, and I'm narrow in my focus. I also find I've developed a plan that's more of a solo nature. So while I listen to everything or read everything in the chat room and Daniel's trades, I often will wait for a while before I enter a trade. So I'm not jumping on TBAs immediately. But I would give advice if you are struggling. I think sticking to the golden rules and TBAs are a must until you kind of morph yourself or develop yourself into what are you as a trader. And that's one thing I fought with, I'll tell you that. But one thing I did is I did discover I have to keep the fundamentals in there, earnings, the basis of a company, the sales growth. That's pretty critical for me. But one thing I caught from Dano was he often said, and I read it in his book as well, is that how much time does he spend on technicals versus fundamentals? And I was having that problem early on. I was more 80% fundamental and 20% technical, and I flipped that. I might be 90% or more technical now, but it helps me to manage risk and increase probabilities. So in addition to my stock filtering process, I'd tell you 90% of the time, 95 plus, I'm going with strong fundamentals and momentum. So I'm seeking out earnings per share, and sales acceleration as a layer and weighting it just as I would up above with the other types of layers, and I'm using guidance as well. So I'll actually weight the current quarter of EPS, say, higher than others, and I'll weight guidance as critical. If I don't find forward guidance is strong or at least meeting, I typically will step away. So that's one thing that's a little different, I'd say, in my style, is I'm weighting earnings, I'm weighting sales, I'm weighting guidance and adding it in as a layer. So, Randy, if you would jump on for me to the next slide, please. So that gives you a sense of how I'll assess a stock. So now, how do I enter? Give you a feel for that. Like I said, I need 5 or more stacked and weighted layers to consider a trade. I'm pretty heavy on the stalking side. I have that as a second bullet in here, but I just throw that out there. So when I find a setup, I'm sometimes waiting, and I've even noticed sometimes I might be waiting a little too long, but I'm looking for confirmation. So, the simple ones we all know, a descending trend line flip, it might look strong, but I might wait maybe a day or two to confirm it, as long as it's not running away from me. So if it ran away from me and just blew out the map, I might have caught it and I might not, but I could tell you this, I might wait a little bit because sometimes I see a pullback on these various flips. And so I'll use that kind of a validation of watching how does the price react after it flips, and then volume. So I'll study it at night and check it and everything. And I tend to use price a little heavier than volume because I've often seen the price keeps moving even though volume slacks off a bit. So I tend to be more on the price side as watching it, and that's helped a lot. So I'm always seeking lower risk, and in some cases I'll go 6+ in layers. And at the choppier the market, the more layers I'm going for. So as you guys and gals see now is that today it's almost you can throw a dart and you're going to get a gain is what it looks like. So I need to be really careful because a choppy market is one where it really tears me up is what I would tell you. So my entries are very heavy on the stalking side because what I'm looking for is finding a methodology and a process for me that works in a good market and a bad market. And that's what I'm trying to develop, which is that consistency, reliability, and when I have that, I have discipline and confidence. And when I have that confidence, it's everything for me. So it really helps me get over that, those hurdles of, call it the emotional challenges. So I slow myself down purposely. So once when I find a stock, I've got everything set up, and I've been playing with the weekly and then analyzing it, looking at the fundamentals. I will drop into the daily and hourly to see if the same analysis holds pretty true. And if yes, then my entry will typically come from an alert or even an auto buy, and I check later at night, or I'll confirm it. And many times as well, I wait for a pullback versus a breakout. And here's a key I pointed this out to Randy, but this one just was like a 2x4 hit me in the head of catching how important this is what Dan mentioned. And I heard him say it before, and I didn't hold truth to it, but all of my big winners came after I bought earnings. All of my money came that way, buying after earnings, never hold over earnings, and can make a ton. So this to me was like resonating, and that's why I kind of surfaced back to earnings, and especially after earnings comes out. If it's strong, it might set up a high tight flag, but that's the type of entry and setup to look for, where I think there's more strength in the return, if you will. So on to the next one, please. So looking at my process to give you a feel, this is how I look at myself and how I view everything. So I have a pretty heavy focus, and even my wife has said I can't focus more than one or two things, so I focus very narrowly. And I look for discipline with a solid plan. And these are things you've all heard, but adhere to that plan, live or die. And I've found until you get like Dano, I have to make it mechanical, which helps. So it's a setup process, and live and die by that process and stick to your rules, and it keeps the emotions away. It's a trick to filter the chat room, but it helps tremendously, as well as the world, all the things they say out there. And I have to wait pretty heavily for true setups, and I seek out pretty low-risk entries. So hopefully I get great entries. If I don't, I'm pretty quick to run, is what I would tell you as well. I point that out a little further, but I will run to the hills real quick out of that stock even before it hits my stop loss. I just like, okay, that's it. It's not acting right. I'm gone. So that helps me filter things for, I think, higher probabilities. Not always higher gains, but solid gains. And I try not to chase what I think could be modest gains, if you will. One thing that, another great thing that Randy has pointed out is price action. Boy, the better I get at this, it has saved me so many times and gained me. So it helped me stay in a stock longer, as well as jumping out. And it's proven itself very beneficially. I focus on fewer rather than more stocks. I will home in on the stronger acceleration of earnings to momentum stocks, to those quality kind of stocks. One thing I've learned is buy right and sit tight. I think Applied Optics, AAOI, is a perfect example. I think I'm still sitting in around 46, and it's still holding really well. So those types of things, and I've seen other of the senior chat members holding stocks way back when. I'm like, wow, they've really got some strength in their discipline. Really important to believe in yourself. That's one thing I had to learn. Believe in your plan. Learn, and learn from your teachings. I review Randy's work over and over and over again. One thing I think is important to have fun, and don't let the loss burn you up or get you over anxiety about it. Learn from it and grow. It's really important. I kind of don't even look at my balances too much, because I'm looking at how am I doing on each trade. That to me is the key. I haven't even measured this year what I'm doing. I'm looking at each trade. How did I do on each trade, and what can I learn from it? So if you will, Randy, the next slide, please. Okay, so here's one. I'm not sure if I think this will help, but here's how I'd tell you how I looked at Randy's class more in detail. I'd tell you. The training just blew me away. It was an awful lot all at once. But what I do is I'll take one segment, and it might be something as just a channel trade. That was one of the first things I started to learn, was when a stock was stuck in that channel. And I think Wynn was the best example. I started trading that and teaching myself to look at the bottom support line when the setup came along on a descending trend line. When the flip occurred, grab it, and then ride it to what looked like resistance on the topping resistance line or the top of the channel, and then jump out. That's all I did for, I think, a week or 2 weeks maybe. I did it on Bib, for example, and it turned out really well on one trade. It was 10-to-1, really nice. But what it did, it helped me see it. It helped me understand it. And I didn't look at anything else. I really didn't care about anything else at that time. So the next one I did, which is an interesting one, when you have a trend going up, Randy made this comment, you could buy off the back test of support over and over. And so all I did was look for that. I think I might have spent, I can't tell you how many hours, maybe 40 hours just doing this, looking for them, finding them, getting the setups, and narrowing it down on the setups. And I found 10, and I was just, at this time when I had told Randy this, 2 had triggered, and it turned out really well. Others have triggered. But the interesting part of it was that's all I would focus on, and it helps emphasize the learning. So that was really important. I've done this on other aspects of Randy's teaching. So what I could tell you as you help to develop your skills is hone in on one aspect. So that's me, my singular focus. And what the Randy's teaching really gave me the light bulb, I'll tell you. And it's also the glue. It kind of intertwined all the other teachings. So once again, I'm being a little repetitive, but I thought this is important. What I do I read the chat room at night. I often see folks that have gone through the training when I went through, somewhat missing it. Some struggle, I know. I feel for them. And I won't say I do it perfectly. I sure screw up at times. But I've found the more I study, the more I prepare my plan. And I've heard Dan say it as well. But I find the more quiet hours I invest, the larger my return, or the consistency of my return along with my confidence. It's really time-consuming for me. It's heavy duty. I study and restudy. Thus, with Randy's course, I took detailed notes and rebuilt all the core aspects of the training. So I literally have a book or a journal. I can open it up to any section that Randy taught and look at how he said it, what he said. I rebuilt the slides. So I have a really good sense of going back and referencing it. And then another along that line about a focus, one weekend, all I did was go after cup and handles, which was one of Dan's favorite setups, but I just focused on that as well. It just really kind of ingrains the teachings to me. And I don't get distracted, so I try to keep myself singularly focused. So, okay, the next one, please. So I thought this might be of interest because I guess in Dan's teachings, it's very disciplined. You're really tight stops, and you really adhere to it. And I get it, totally get it. So if I jump in on a Dan's trade at his TBA, I pretty much go with his stops. But as a general rule, when I'm out on my own solo plan, I'm in the 1 to 5% range. Only a few times I've gone higher. But I do it based upon each chart pattern, the range of the bar behavior, and be sure I give it room to kind of, I'll call it, swim a little bit. And some others I'll tighten up, and I'll give you some examples. I went after Stamp not too long ago. And I've got the chart further back, and I'll give you some insights. But it was a low float, but a wide mover. I used 5% on it, which was 550 in that case. And actually, it worked out perfectly. It came super close to stopping me out, but okay. But it didn't, and then took off. EW, though, I used $1 because the pattern was clear. It was tight. And it was saying if it drops $1, which would drop outside, I think, of the kind of like the flag, I would be wrong, and it's time to get out. Or if you look at the kind of lower priced guys, UCTT, BZUN, and ICHR, I was in the 50-cent range when I was going with them because I thought, I better be tight because I wasn't sure how they were going to move. I didn't understand their pattern enough, so I went real tight. One thing I would say, too, is I've said this before, but I wait longer. And that's one thing I learned from Randy. So if I get the super rich, I got to get in, I go real small with an entry. But I stalk and stalk and stalk, and overtly stalk, I'll tell you that. And I go back even after I've missed Dan's TBAs, I use Randy's style methodology on an entry in Dan stocks. And I found waiting helps me obtain a lower risk and a higher probability of success. So jumping on, I'll throw out few slides and give you a sense of it. So UCTT, this is a funny one because this came about when I was looking for cup and handles way back. So before Dan put it in his slides, I came across this one, which is kind of funny. And then I think it was Laura in chat mentioned it, because Laura comes up with some pretty good trades sometimes, and I thought, oh, let me go dig and look that up. So what was interesting, it fit, from the fundamentals. But what was funny too, I was waiting for this thing to kick out a handle, to start dropping, and I drew a couple lines where I thought the handle would get built out, and it never did. So I studied it further. It had, and I think this is real close to earnings. I jumped in at like 1582 on the first one because I went ahead and grabbed it when it came outside that cup fully. So I missed that right hand, if you will, rise of the cup. And I thought, okay, it's clearly stronger than I thought. And I went at 1582 at one point. And what really interested me in this was, of course, the right hand of that cup, and then the volume down below was so impressive. So what I often do, as I point out down there, is I often just will go through weekly charts and I add up how many weeks of green volume bars up and how strong are they versus the prior weeks or months, and then how many are green out of, say, 10, 20, or 30. I'll sit there and add them up. And if they come away with saying, okay, let's call it 70% green out of 20 weeks, boy, that one's given me a great big green flag for me. So if you jump on the next slide, Randy. Just drilling down a little further, this shows how I got in. So what I'll do is the earnings were strong on this. It had a great trend. It was in the right sector. The moving averages were setting up very nicely. It broke through what I thought would have been resistance on 2 different times, and I just watched it go right through. And then it created a very small descending trend line. And as soon as it flipped, I waited at literally, I think, 2 days, and to confirm it, and I jumped in at 1582. And then what I did, it had a nice little pop, but I sold before earnings, so I didn't want to hold it. And it crushed earnings, real solid, and I bought back in at 1829, and that's where I sit today. But it's that kind of thing. It's just like, oh, you can tell when it came out with earnings it was good, grab a little pullback on it, and away I go. So it was really beneficial in that case. But that's kind of how I look at it. In this case, I've said to Randy, I use slow stochastics very heavily, and I use it as a layer. I didn't mention that before, but I actually add it in as a layer. Not always, but often. It doesn't always apply. In this case, this one was sitting up very high from a stochastics point of view, and I didn't have to, even think twice about it on this case. But I'll talk to one a little further. If we move on from here, Randy, to the next slide, I'll show you another one. Here's Momo. I thought this might be an example of giving you an idea that I focus on a few stocks. And what I mean by that, as I start getting a sense of their pattern and how they sell off or not sell off, how wide they move, and in this case, Momo beat earnings, raised guidance, and it sells off like crazy, which really puzzled me. But I also thought, I've seen that before in Momo, and I've traded Momo probably a half a dozen times at least now, if not more, and I catch it on those odd dips. And what it was doing, the slow stochastics, which isn't very well defined here, was dropping pretty hard, down sub 20% range. And I was catching that, not only the daily, but really the hourly was demonstrating that very cleanly here. And that's the thing that got me so interested in it. So therefore, I watched it right along those two moving averages, and it started to hold, and it was bouncing back and forth, and it showed to me it was holding over a few days, you know. So needless to say, that earnings beat and the guidance strength and how the pattern of the price moved gave me confidence to take an entry. It wasn't big, but I also had a very tight stop loss. So I went in literally with 50 cents on it. And I thought, okay, I'm in it just a little over 38, and that's where I sit today. You know, I thought, okay, let me run for this one and see how it goes. And so far, it bounced right off there very nicely, and it showed oversold. Slow stochastics was giving me confidence along with the other things I'd mentioned. So it was like, I got it. I'm on it, and so be it to this day. So if you want to move on to the next one, Randy. The next one would be Stamp. I thought I'd show you this one as well because I thought it was interesting. They beat really well, and they increased guidance in the stock tanks, and I didn't understand it at all. This is one I stalk. It had all kinds of solid trend lines, great earnings, consistent. The float isn't real large, so it has the potential to move pretty wild. However, when I started digging into it after I saw this, it was being shorted. I mean, heavily shorted, and I don't remember whom. Sorry, but it was a fairly big firm, and they were saying the business model was flawed. It was crap. So, on the other hand of it, since my experiences in the public and private industry and tearing apart financials and business models for years, I could sense pretty quickly, and I studied Stamp pretty heavily, it wasn't flawed, and it was getting shorted inadvertently, if you will. And I get it, and I thought, okay, I'll just wait and watch. So I stalked it and waited for it, and it held right around that 100 mark. And I saw those, if you see those two little yellow arrows, that was my first indication of a double bottom. And then I had a support line drawn. Of course, you see that. And it showed me that something's going on, and the volume of sell was slowing down dramatically, and it was trying to lift. It had tried a little bit before, about 116, but I thought, no, it wasn't real, and sure enough, it dropped. But they ran out of, if you will, ammunition as far as trying to sell the stock, and I went in with an entry. And I wrote it, but then it started to fall a few days later. So I jumped in probably around the 104, I think, in this trade, and I got out pretty quick. So I was out at 110 range, I think, or 108 on this one. And then the next time it did the same thing, and I actually held, and I added. So it held twice. So those two yellow arrows to the right, they tried shorting it again. Heavy red bars you can see down below on the volume. And I jumped in again twice, and I added to my position twice. So I think I averaged around twice 101 to 104 again, and it took off. And I actually sold before it got to that upper, if you will, I don't want to say resistance, but a semi-resistance line above. Around the 120 range, 118, I started phasing out. And it kept going, of course. But it looked pretty safe because it was clear the short was over, and buyers were really stepping in strongly. And that gave me really, really high confidence to get in. So I thought I'd give you that sense if you get to know price and price movement, price action, the stock, and the strength of the stock or lack thereof, and how it was forming, it gave me confidence is how I entered this trade. So another one here, if you go on to the next one, is WB. I know you guys were gals were all over it today, which is great. But this is where I started on it. I was watching this for a little while, and I saw this nice little wedge. I had my lines drawn. It has solid earnings. It had a decent accumulation going on the volume side. There was a lot of interest in it over there, of course, the China Twitter, and they're making money, which is nice. So I saw this basic, and like I said, Randy has said this over and over, but a very simple wedge and a descending trend line, and it flipped. And I jumped in at 52, 66, I point out there. But all my point is, it was so easy. It was sitting right on the moving averages. It was fairly coming off some lows, and it looked pretty safe. So for me, it was a low-risk entry. I jumped in and rode it, and I got out before earnings. So that's where I got out. I just said I'm not holding it through earnings, even though it flew, and I missed the bigger run, I'd say. But from a low risk and managing my risk and the confidence of the trade, it was spot on for my style. So that kind of, so maybe the next one now. I thought I'd give you a different view of, these are two stocks that Danos talked about, MTSI, and I'll go on to another one in a minute, but MTSI, I bought that initially, but I sold very quick. And here's why. I started analyzing it. I liked the earnings, but I didn't like the trend of the stock on a longer flare. And it had too much volatility because it would sell off. So I didn't have a comfort level, even though my entry was okay at just under $60. I didn't have a comfort level, and what it did, it was in a flag, and it was kind of like a high-level base, but it was showing a curl. And this, the important point here, the hourly for slow stochastics was giving me a great big red warning signal for me. And it was curling down and selling off, and I just said, no, I got to get out, I'm gone. And so I sold and actually made, a pittance, but I got out without a loss. And what I was convinced of, it's going lower, and I noticed, I think when I was reading on something, that it looked like it was going to sell off further. And so I had another trend line written or drawn where it might drop to. And I thought I'd wait. So if you go on the next slide, this will kind of give you a better picture of it. So I judge the quality of the chart and the quality of the move and the strength of the stock holding the move. And this is what I'm talking about of how it was curling. And if you look down below, and I know it's not the greatest stochastics, but it was curling down and getting in the red line. And that was a big warning signal for me. So I stepped away, and I saw it did come down a little bit today as well. So it gave me the feel that it might dip, say, 56 range or something like that. So this is what I do with even, I'm looking on the sell side, is watching that price, how it holds, and then I use slow stochastics to give me another indicator. And that's where I was saying it jumped out. And the other thing I do is I looked at the quality of the earnings and revenue growth, and down below the last point, so earnings grew 8% in this quarter, and revenues grew 9%. So if I had a choice between MTSI and the next one, if you want to jump to the next one, which is MKSI, and I looked at the two charts, and if I was restricted by, let's say, one choice, I then said MKSI. And here's why. If you jump to the bottom point, earnings growth are 20% and revenue growth is 30%. So very strong beats, much stronger than the prior stock. Also, I love the discipline of the chart. It's tight. Even though it jumped a little bit after the earnings and it was sitting up around the 80 range. And I remember Dan saying buy dips. And so I got in at 80-20, and I think it may run to 100 is my thinking. But overall, it showed everything I needed. It gave me the opportunity. It flagged. I went in with a pretty tight stop, but it held, and the price movement was solid, and it ran up the other day, or I think yesterday. But that's where I go after, and why I keep going after the earnings beat, because I think this one is going to move more, assuming the market holds up. So that kind of gives you a flair for various trades that I'll go through, a little different and way off the, if you will, the radar of how Dan would approach a trade. This one actually fits it, the MKSI. The other ones, not so much. They're Randy style is what I'd say. So net, if you go on to the next slide, this just gives you a quick feel of my success so far, which I honestly, massive kudos to Randy, because he's the guy that put it together for me, brought a sense of reality to everything I've studied, and it really brought it together. So I track every trade, just the trades. I don't really worry about my balances so much. I adjust my plan pretty frequently as the market conditions change, and I often go smaller on trade lots when risk increases, or if I'm getting into a trade where I think I'm a little on the high side, I go in very light. What I do find, I'm always battling myself. It's almost like you're golfing against yourself, but it's just always a challenge to edit, adjust, and readjust yourself, and it's never ending is what I find. So overall, I truly hope this gives you some little tidbit or insight or an idea that might help you. It's really been beneficial for me, and so far pretty consistent on my trades. There's 115 of them so far, and you can see how they moved each month. And I work full time, so I'm doing this on the side. And just for grins, if you look at January, I had 38 trades, but I had 2 weeks off in December, so that's all I did was set them up. And they came through in January, so just to give you a feel for it. So anyway, hope that helps everybody, and I sure appreciate imparting a few words of thoughts to you.
Okay, that was awesome, Dave. That was awesome. In fact, it was beyond fantastic. What I can tell you that I automatically want other people to understand about it is that you took the layers, you adjusted them to yourself, and you're staying in your own lane. You're swimming in your own lane in this game, and not worried about what the guy on the left and the right are doing. And you're just following the plan and letting your own feedback of your own results and the input and output of that tell you what's going to happen next.
Yeah,
I summarized
true.
that, okay?
Oh yeah, perfectly. Because I had to find myself. I otherwise, I don't think I'd be any good just trying to follow Dan's TBAs purely simply by themselves. And what you imparted to me, Randy, was just beautiful. It's perfect. It fits so well.
Well, let me say it this way, though. There are some strengths that you have that even I don't apply to this game. And so I'm going to continue. They don't know this, but I'm going to say it in front of everybody. I'm going to beg you to keep looking at my MarketSmith tool, and hopefully we can work out a universe that meets the criteria that you talk about. And my goal was to hand the group a universe each week that completely already has vetted the concept of these have earnings and revenue growth that is good enough to consider them in the technical review list. In other words, why even look at a universe? Why even open a universe that doesn't already have enough of the fundamentals before you even begin? So that why find a pattern on VRX in this losing model of this stock on 52-week lows when you could be finding a stock that meets the criteria of strong earnings and the rest. Also, many before you have already confirmed, and before me have already confirmed that you're right. O'Neill knew that earnings was a driver of gains. So Livermore and Darvis had it in their formula. So theoretically, we would all be remiss in avoiding some kind of universe limitation based on growth.
Yep, that's true.
Okay, well then, good. I'm glad that'll be helpful. The other thing I wanted to ask. So I'm going to add, there may be a question or two here. Let me see if anybody has a question for you. Will I post these slides on Slack? Would that be okay with you, Dave?
Oh, sure. Yeah, no problem.
Okay. Next question. Let's see. When you set an auto buy stop in to a trade, how do you do that? Do you just set a price and then take a smaller position on an automatic buy?
I do. I put a set limit in there on where I'll buy it, so it's not at market price. It'll just be where I think it might break out of a flip or a descending trend line, and then I take a smaller position. And it's exactly what you've instructed, Randy. I take that small position because I tell it's going to move. I won't be around and to be able to catch it physically and then make the trade myself, but then I'm in there and it gets my eyes on it, and I really then study it hard, and say, do I add or do I step away? And or leave it alone and put in a stop loss and let it go.
Okay, that's awesome. And then I have another question for you. This is a really good question, is what is the order that you weight trades? I mean, weight these layers. Do you have a sheet you use that says this layer is the highest weight, then this one? How do you determine what they are and which ones are in which weight order?
Unfortunately, I don't have it by what I'd call it by each stock or chart I look at. It's funny, I'm doing it in my head.
So in your head, you say support is a heavier layer here because of it's so close to support?
Yeah, or for example, slow stochastics, I might make number 1 because it's in like the Weibo trade I showed. Slow stochastics was confirming that descending trend line flip so perfectly complementary, it made me scream to get in, even though it wasn't what I'd call a super entry or super layered. It just screamed that it was there for me.
Yeah, so you like these big dives down into the oversold areas.
Yeah, or to just tell you the other way, on MKSI, it crushed earnings by 20%. It's got revenue growth of 30%. It literally, and it was sitting in that high, tight looking flag. Those three, along with everything else, the trend and everything else is there, those three were grossly overweighted on a probability basis. And, of course, Daniel said, go for it. Huge versus, say, slow stochastic. I could care less about slow then.
Right, because it wasn't a dip buy.
Yeah, exactly.
So in other words, there's no point in the stochastics when buying pure strength in a breakout situation. But in the case of a pullback, like for instance, these last buys down here in WB, these are down where stochastics has rolled down into an oversold territory, or at least is curling back up from a pullback, correct?
Correct, yep.
And you're not predicting the curl, you're reading it as it's starting to curl back up.
Right.
Got it.
And that was the case in Momo when it, sold off pretty hard the other day. It just showed on an hourly slow stochastics, it was setting up pretty nice, and then it showed support on the moving averages, and then you saw buyers coming in, and the price actually behaved based on past trends or patterns, and it just screamed like, okay, the selling's gone. It's going to start rising, maybe not huge, but it's going to start rising. You can see it coming.
Yep, and the reason, and the stochastic here was a high-level layer here because it was so beautiful the way it curled back over the 20, coming back out.
Yes, sir.
That makes sense. Let me see if there's anything. Okay, so I'm not a big indicator guy, but I said it in the class. One of the best indicators I've ever seen is stochastics. It basically mirrors most price action. So if you're going to use an indicator, it's a hell of a good one. Let's see what other comments are here. Let's see, 1 second. Let's see. What are your settings? I already know that. Someone asked, what are your settings for stochastics? And your answer is default.
Yeah, pretty much. It's slow stochastics, and it's on the default. Yeah, it's pretty simple.
And then let's see. How do you size your position? Do you use 1% risk? Do you use a percentage of the account? How do you size?
It's a percentage of the account, and then my confidence in the trade, because sometimes I go heavier on some trades. Okay,
so in other words, you get 12 layers all on your side. It may be one you take more than 1% risk on.
Right. An example might be Nugget back in December when I watched the Fed go through their interest rate decision. They made the interest rate, and gold and Nugget dropped like a bloody rock.
Right down here.
Then slow stochastics set up, and you could see the long-term trend was pretty much on a bottom. Not as severe as the prior year, but it was there, so it just yelled, go ahead and buy it. So I went a little heavier on that trade. So it varies, is what I would say.
I remember that trade, and you absolutely decimated that thing. That trade was enormous. enormous.
Yeah, it worked out nice. Yep.
That was a heck of a trade. I remember you doing that. Okay, let's see.
Mm-hmm.
Let me read if there's any others here that I don't maybe miss one here. That pretty much covers most of them. I may have missed one or two, but that pretty much covers it. So that's all we wanted to do today. Is I wanted people to see an example of the reverse of me. I'm the guy with his hair on fire, running around the room trying to do one of everything. And then there's you, who is just central to one concept at a time, plotting through one chart, giving it a focus and a hyper focus to read it and wait for the pitch. And more people would be better off copying you. Admittedly, I say this as the person who teaches, would be better off listening to you on this than me. If I was to start the class over again, I probably would limit a lot of the information, because it's true. There's so much overload and information. It's almost better to master just a few layers than it is a ton of things at one time.
Yeah, big time. For me, it's my style, the way I absorb things, and just over learning it or ingraining it in your mind. That helped me tremendously.
Okay. Well, that was Dave. I can't even thank you enough, guys.
My pleasure.
We're going to cut it short today. I usually stay here for like an hour and a half to 2 hours, Dave, but I have to work on a newsletter for tonight to help Dan.
Okay.
So I really appreciate it. I hope everyone had an awesome time on this. I made a recording, and I'll get it to you and everyone else later tomorrow. And we'll see you soon.
All right. Very good. Thank you, everybody. Thank you, Randy.
Thank you, everybody. Okay, bye.
Bye.